Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky to be joined by Adam from, NFP Ventures, but it's a little bit more complex than that. So good morning, Adam. How are you doing?
Alex, I'm doing great, and great to be with you today.
Yeah, no, thank you very much. Well, look, I sort of said NFP, but perhaps you kind of, for the folks that don't know as much about the venture world, be kind of great if you could kind of introduce the business and how it kind of potentially is morphing away from kind of an NFP Ventures title as well. That might be interesting to know.
Yeah, I was just thinking about the best way to do this. So I'm Adam Blumencranz, as Alex mentioned. I work for NFP Ventures, which historically has been the corporate venture capital arm of NFP, which is a large national incumbent insurance broker in the US. And first 3.5 years, we've been under the NFP umbrella as NFP Ventures. And I don't know if it was last week, next week, and a month from now, but we are transitioning to our own standalone fund. The new name will be called Distributed Ventures. NFP, the institution, is going to be our largest anchor LP. So in terms of our differentiation as an investor, nothing will change. Mm-hmm. Core focus on insurance distribution across all lines of business, very close working relationship with who's going to be our core anchor LP, NFP. And, we plan to have as much success going forward as we've had over the first 3.5 years out of the gate.
Awesome. Thanks, Adam. That's a great intro. And I wanted to ask you, and I suppose it probably changes slightly with this kind of new raise and new round, in that, what are the advantages kind of working in the kind of corporate venture versus a kind of standalone? And obviously, clearly you're sort of shifting from one to the other. Has there, been in this sort of 3.5 years you've been around, has that played to your advantage? Have there been situations where the kind of unique connection to NFP has kind of helped you either win in rounds of investment or kind of just kind of helped along some of the kind of investments you've made?
Yeah, it's a good question that the team and I think about all the time, because you're right. Being associated with an incumbent, working for a corporate venture capital arm, which we have done historically, obviously going to change a little bit going forward. There's a ton of advantages, mm-hmm. but there's also a ton of pitfalls and disadvantages that you have to be very aware of. And so the obvious one is, you're associated, you're attached to a large national incumbent. How flexible are you? Mm-hmm. How rigid is your mandate? And so, we've done a great job setting expectations on both sides, not only with founders, but also internally, mm-hmm. Related to how critical it is in this day and age, and the market we're in, which is absurd, which maybe we'll get to later on in the discussion.
Yeah, definitely.
You have to be flexible. You have to be nimble. You can't wait for the core business to spend 6 months, working with us on diligence, only to turn around and thumbs up, and then we start a diligence process. You're going to miss every deal you want to get into. And so we've worked really hard to ensure that whatever disadvantages could exist with the CVC structure haven't for us, is the first point. The second point on the advantage side is there are 6,000 employees that work for NFP. And then more broadly, NFP's got massive relationships, given our influence in the market, with carriers of all shapes and sizes and incumbent technology companies. And so in theory, on paper, you have an incredible network of subject matter experts that you can call on and speak to, during diligence. And so, the other thing that we've over-indexed on the first 3.5 years out of the gate is building that network, ensuring that we're not going to folks when we have an opportunity and they're meeting us for the first time, because, what's that conversation going to be like? For 30 minutes, you're introducing yourself, you don't really know them. So we spend, I don't know what the number is, but more time than in theory one may think we should, working those relationships, getting to know folks within NFP and sort of the broader ecosystem that NFP plays in, to appreciate what makes them tick, what they're interested in, who's got appetite for real change and innovation and technology. And so when we do have a company that we're looking at, either on the diligence side or after the dollars are in and we're talking more post-investment support, we're picking up a discussion with a friend.
Yeah.
And we're getting real information. We're getting to the bottom of things very quickly. We know it makes sense. We know it doesn't. And the last thing I'll say is, your point, this day and age, not only are rounds in terms of multiples and the valuations through the roof, but there are also a lot of funds. And so it's more competitive than ever. And so everyone sort of has to figure out what their differentiation as an investor is. And so ours is the ability to tap into this massive network of subject matter experts and distribution is the good piece. The bad piece is you have to deliver on that promise.
Yeah.
And the minute you make that promise and 18 months, 24 months goes by, and you don't deliver, word will get around quickly. And so it's critical for us that, again, we foster those relationships. So when the time comes post-investment to get that support and tap into that distribution, we can fulfill or deliver on the promises we make to investors up front, or to entrepreneurs up front.
Yeah. I think the thing that struck me about venture, and particularly, it was relatively new to me. I specialize in insurtech, and 3 years ago started entering that world, and it's only then you kind of coincide with like investors and venture capital. And what surprised me most is that the money's kind of like taken for granted, right? You like you can't run a fund if you don't have any cash, so that's the kind of taken for granted. What surprised me was how important networking was, your ability to connect people with importance. And it seems to be that is the core thing, like the strength of that.
People think, from the outside looking in, they think venture capital, investing in general, and certain, I guess, aspects of investing is, but venture capital is not only about the technical bit, right? Can you model? Can you size a market? Can you do the desk research? So much of what we do is related to empathy, right? Can you put yourself into the shoes of the entrepreneur? What do they want from you? And to your point, do they just want capital? Great. They could probably get that from anyone. Do they want distribution? Do they want subject matter expertise? Do they have all that? And frankly, they're a first-time founder, and what they want is someone who's going to help them, operationalize their business and position them to grow really quickly. And you're right. The other piece of that is people want to work with people they want to spend time with, and so it's not just about getting on a call and flexing your strategic muscle or your intelligence muscles about how I've done the research and I could size the market and I know how the model and the percentage and how all this comes together. Is that what an entrepreneur wants? Or entrepreneur wants, someone who could, have a conversation about whatever issue they're having that day. And it may be super tactical and financial related, or it may be about recruiting.
Yeah.
And more on the people side. So you're right. I think it's a very underestimated side of the industry is the network, the empathy and the, interpersonal relationships that are so important, not only between entrepreneur and investor, but also investor and investor.
Yeah, absolutely. Yeah. I think it was something that took me by surprise, but, pivoting that kind of almost in the reverse, talking about the money, we've mentioned due diligence, we've mentioned the size of the rounds. Seems to me that the time given to due diligence is going down because of the amount of competition, but the size of the rounds is going up. I just wanted to get your hot take on, the state of the market at the moment. It's frothy. Is it a bubble, or what's your view?
Yeah, it's scary, Alex. You're 100% right. It's frothy. It's a bubble, but just because it's frothy in a bubble, does it mean it's going to burst tomorrow? No, maybe 2 years, 5 years, 10 years, maybe 2 decades. We are in once in a generation, really unique time in terms of what technology is doing across so many different industries. So there's no doubt that in theory, there's justification for some of the bubble or frothiness, but it doesn't change the fact that you're right. The time to make a decision is going down, and multiples and valuations are going up. And so, now more than ever, critically important, sort of know your strategy as an investor, know what you do best, know where you can flex, know where, there is opportunity to get, a little frothy on the multiple side, because in our case, we either know the size of the opportunity, and from a return profile standpoint, it still makes sense, or know that it's a little bit frothy today, but just within the NFP ecosystem, either within NFP or our carrier partners or some of our other broker partners, there's enough opportunity that in a short amount of time or on an accelerated basis, the company will grow into that valuation.
Mm-hmm.
And so, coming to the table, Alex, I guess, with as much of an informed perspective as possible in these, environments is super critical. And so it's something we spend a lot of time on.
I was going to say, how do you adjust to that? Do you become much more rigid on your thesis on we're interested in these opportunities, and or is it more about, as you mentioned, kind of what you offer and kind of looking at your own USP?
Yeah, so 100%. Like, you have to be, now more than ever, you have to be thesis driven, because you have to put the work in up front. So if you have 3 weeks to make a decision, you can't possibly start from scratch.
Yeah.
So you really have to do the work in advance, and a lot of that relates back to being super thesis driven. The reality is there's always going to be a part of what we do that's going to be more opportunistic, just because it's impossible for us to have a thesis or do all the research necessary or that's relevant to every problem that, in theory, distribution or subject matter expertise related to NFP and our ecosystem can help with. But that goes back to having the network, right? So although we may not know everything about that particular market, that particular problem, if we have the network in advance, when we are presented with that opportunistic deal, we very quickly know who to talk to, sort of the questions we need to ask. And so, we won't know everything, but we'll get up to speed pretty quickly because of those relationships that are in place. But yeah, you're right. Thesis and doing as much work in advance of meeting these companies is more critical than it's ever been.
And I think that's the thing. I mean, in InsurTech, someone asked me the other day saying, "Oh, you specialize in InsurTech?" And they actually went, "Well, what do you mean by that?" And I said, it's a really good question, because you're talking anything from the kind of neo insurers that are like full stack digital insurers, digital MGAs, through to kind of like really niche kind of SaaS products. And it was a really good question for me to answer, because I was going, well, what's the problem I solve? What specific problem am I best served to solve? And you do you look at everything? And you can't. There's just simply not enough time. And also you kind of you wish you end up diluting the brand, right? If you Adam at NFP like takes on something which is outside of like your kind of real natural kind of knowledge base, or outside the kind of immediate knowledge base of NFP, it's going to be a bad look, right, over the strength of time.
Yep.
I wanted to ask you about pitching, and I'd asked this. I had James Toozle on from EOS, who I know and I was going to be mean and ask you about a cultural difference between the US and UK, and I think that's unfair, because you operate in the US market, and so therefore kind of the exposure is different. But I wanted to ask you something I asked him, which is what you specifically look for in a good pitch. What is that? What really ticks the boxes for you?
Yeah. So a founder I can get along with is like top of that list. Number one. Number two is a founder with passion. I'm going to say a lot of cliche stuff. Hopefully somewhere in this answer, Alex, I'll get to something that's not cliche. I have no idea. We'll see. I'm hoping for the best right now.
Cliches are cliches for a reason, though, right?
Exactly. No, it's important. Yeah. It's important. You want subject matter expertise somewhere along the line. I mean, there are some times we have just a phenomenal founder that checks every other box, and you think, he'll be able to grow his team. That'll help him on the subject matter side, which also works. I guess the most important thing is clarity and focus,
right?
Particularly in insurance. There's a lot of opportunity. There's a lot of need for change. But what I sometimes say is, I could spend 15 minutes, probably with Alex, or anyone, with you or with anyone, in terms of like what the future of whatever we're talking about within insurance needs to look like. That's the easy part.
Yeah.
The difficult part is appreciating how the chess pieces within insurance work, appreciating how difficult change management and inertia is, and the incumbent players and the influence they have on the decision making of others within the industry. All that stuff is the more difficult piece of the puzzle. And so if we're talking about an insurance company, whether it's an MGA, a new carrier, an incumbent, or a software company selling to an incumbent, I want to hear that you've thought about that piece, more so than you've got the slickest technology in the world, and you're going to light the industry on fire just on the tech piece alone.
Yeah.
So that, it's obviously all the cliche stuff, but then the specific thing that I guess is unique to insurance is an appreciation for the nuances and the change management and what it is, and the clarity and the focus that it is going to take to go from step 1 to step 2 to step 3, 4, and beyond.
Yeah, I think that's really insightful, because as much as you felt like you're giving me cliched answers, I think that last bit particularly is interesting for me, because you and I both know that I've spoken to a number of kind of companies, and we've talked about this before, fairly early stage. Tech's great, right? The tech they've created is groundbreaking, it's different, right. But there's almost like a willful lack of appreciation for the complexity of insurance.
That's right.
And rather than kind of it be this kind of, it's often worn as a badge of honor, like people love talking about disruption and we're the Uber for this or whatever.
Right.
But actually it starts to ring hollow. And I said to someone the other day that they were going, insurance is broken. I was like, I think Lemonade trotted that line out, and they've done very well out of it. And they might be right. But you kind of, at some point, you've got to stop saying the same thing, because, because particularly for me, if you don't have any insurance professionals or enough insurance knowledge on board, or advisors, or whatever way you get that information into your business, it just smacks that you don't know what you don't know what you're talking about.
That, Alex, I'm so glad you brought it up, because now that I think about it, that's the number one pet peeve that I have with entrepreneurs. It's the quickest way to get a pass is if, and maybe to back up, we play NFP Ventures, now Distributed Ventures going forward. We play late seed, early Series A. So we're early, right? You don't need product market fit in theory, signs of it, a little bit of revenue helpful. But again, like, our value is to take those those pieces that you have as you're getting close to product market fit and, starting to scale on the revenue side, bringing in our strategic distribution potential, and then really, scaling a business from there. And so I'm okay and almost prefer when we ask the questions you just, referenced, and the answer is from the entrepreneur, I don't know the answer. Here's my best guess today. Here's how I plan to, iterate on. I'm going to try to find the answer this way. If it's A or B, I'll go in this direction. If it's C or D, I'll go in this direction. But Adam, as we're sitting here today, the answer is I don't know. That's an A+ answer. That's expected. We're playing early. The valuations are what they are for a reason, because you don't have all the answers. The easiest way to lose all credibility, and whether it's intentional or not, for me personally to say I'm not interested in this business, is when, again, Alex, I mean, you made reference to it, is when, you sort of like brush it aside, or you give an answer that you think is concrete. We both know, it's not concrete. And, it's clear as day that either you're not up for the task because you don't understand that that's not the answer, and that's going to be much more challenging to get, or you very much know what you're doing and you're just not being honest. And you think you're telling me what I want to hear. And, usually in the first few conversations that happens, it's a sign of things to come. And that's rarely something that ever changes. So, I totally agree with you.
I think culturally, though, there's something, and I think this is a hangover from the pure like tech plays and the tech world, is this kind of like bad boy tech image of oh, it's all about ripping things up, and
Right.
but I've always thought you need to understand the thing to break it. It's like you need to understand something to take it apart and then put it back together in a better way, like anything.
Right.
And you might understand a specific problem better than anyone in the insurance industry. So let's say artificial intelligence, and then you want to apply that to insurance. But like for me, the smart way to do that is go, we know everything about AI. Now let's find someone that knows a lot about insurance, and we can pull that together. Vice versa, right? We've had lots of people that come from insurance that have got an idea of a solution, but they need a tech co-founder, and
Right.
that challenge. So I was going to ask you this one. I do want to talk about talent, but that's my kind of go-to passion subject. So I'll probably save that a bit.
Okay.
What do people usually get wrong when they're pitching? Is it that kind of like brushing aside or something, or is there some other kind of pitfall that you see people fall into?
So it's definitely that. The other one is especially the where we play, which is early. Don't focus on your ridiculous $10 billion market that makes no sense. I don't care about that. We'll get to that. I'm going to assume that there's a big enough market here. We'll figure out if it's 2 billion, 20 billion, 100 billion. Like, we'll get there. I'm not interested in starting there. What I want to start with, again, for a seed and Series A company, is, again, you just articulated it. What's the problem? The specific problem today. Within insurance, you got to go real deep, right? Explain the nuances of it. And then where's your wedge into that problem? Where are you going to start, right? Because if it's as complicated and as much of a disaster as I'd imagine the entrepreneur thinks it is, you can't just flip a switch. So you got to start somewhere. So where are you going to start, and why are you going to start there? And then, if you start there, how is it going to help you solve the next problem, and the next problem, the next problem? And then over time, the last 5 or 10 minutes of the first conversation, you then want to tell me, once you get over those first 4 to 5 hurdles, then all of a sudden it unlocks this massive market. Great. But don't tell me, you have great tech and a $10 million market. We're great entrepreneurs. So as a result, you should be interested in my company. So, it's again, it's sort of all the same theme we're talking about, unfortunately, but it's the appreciation for the complexities in the industry. Yeah.
How important is it for you that someone's been a founder before? And obviously it's kind of, I assume the obvious answer is that if they've been a founder and they have a good exit, that's great. But is there any benefit to someone even being a founder if it's not gone well? Like, how do you view that when someone comes in and, how do you view that kind of situation?
Yeah, it's a good question. You get credit for being a founder before, because and when I started this, and I'm sure you probably felt similarly, you think that it's more just an on paper thing, but as an entrepreneur, that you make a lot of mistakes and you learn a lot. Whether you're doing it for 5 years or 10 years or 3 years, and the reality is whether you succeed or fail. And so you come to the table saying, this is my second or third, whether they failed or not, whether they succeeded or not, you're to your point, you're probably going to get credit for that. And you should, because you're going to inevitably make less mistakes. The flip side of that is if you're a first-time founder, first-time founders have been successful, right? Everyone, even repeat entrepreneurs, had to be a first-time founder at some point. But, you'll just, you'll be a little more careful in terms of asking certain questions about what they can do and can't do, where they're going to need help, where they won't need help. And, on our side, we'll sort of ensure that what we can do and can't do for them, and what we have time for and don't have time for, what we think they have time and don't have time for, sort of aligns with where they are as a business. But, so to answer your question, it's, you'll get a few points for being an entrepreneur, or repeat entrepreneur, as you should, but, it's not a wholesale, rejection or significant downgrade if you're a first-time founder.
No, it's a good point. I mean, I was thinking about this. I think I've read something, and someone was saying that they'd had one of their investments had to phone up and said that unfortunately they'd had to fold. And it was a private investor, but he was writing this article saying I'd still invest in that person in the next business they do, because I just believe in them. And it was bad timing, bad luck, all of these things, but because I think about, this is my second recruitment business, and the first one, it didn't fail in terms of kind of financially, but it was the wrong setup, and I learned more about anything I'll ever do with that going wrong. We had a business partner, we both had completely different visions about the business, and then we had didn't have any cast iron agreements about how we were going to kind of travel through the first 3 years of existence. So we both kind of just went, oh, it's fine, assuming that we both saw the world the same way, and we didn't. And then recently I'd a wannabe kind of startup guy talking to me about, he'd found a partner, but they were having these kind of problems about agreeing a way forward, and I was like, just stop now. It's like, that's a disaster waiting to happen, and not because either party's bad people. And like my business partner, good guy, like really good at his job, just didn't want the same thing as me, and we didn't get that out early enough. It's so difficult.
No, you're that point's a great one. Like, if you fail as an entrepreneur, but you learn this incredibly valuable lesson that now you're going to take to your next business, who cares if you fail? That lesson's worth gold.
Good point. I learned that I'm a complete megalomaniac and I have to be in charge. That's why I learned. That's why I work.
Whatever works.
Works, Alex. I was like, why'd you work for yourself? And I'm like, I'm completely unmanageable. That's what it is. I mean, so talent is my pet project. Obviously, it was a bit more than that. It's my business. It's what I'm doing. It's not a pet project. and I think I underplay how much I enjoy, particularly this space. And look, I play in the same area as you, in sort of large seed rounds or Series A. And the reason I do it is because I love the fact that if I put someone into a 10-man business, it can transform that business. It can be the reason they succeed or fail. I'm not going to claim that, that glory for myself. It's about the people involved, but it's more exciting to me than, adding a person into a traded company, because it doesn't shift the dial. So it's really interesting. How important do you think kind of the teams are to the success versus kind of like the idea or the concept or the tech, for example?
You downplay it. The reality is, I'm not sure there's a more important conversation that we're going to have during today's discussion than this. End of story. Like, full stop, for multiple reasons. Also, I'm here today, not because I have this incredible reputation and, you sought me out, we never spoke before, and you just wanted me on your podcast. And maybe it's a piece of it, but the bigger piece is, I saw the writing on the wall. Mm-hmm. Talent and recruiting is going to be the difference for a lot of the businesses at the seed and A stage that we play. Mm-hmm. And, we started talking, and frankly, as far as I'm concerned, maybe feel differently, became friends. And bonded, no pun intended, Alex, bond over the fact that we felt and saw eye to eye with this stuff. And so, we started talking, I don't know how long ago. And even since then, it's become more paramount. Talent, recruitment, more paramount. The competition in market for these companies is absurd. It all trickles down. There's more money out there. There's more founders that are starting businesses. They're getting more money earlier. And like, the big part of getting more money earlier is going to hire talent. And like, how many times we have to hear this cliche that an A+ team with a B+ idea is much better than a B+ team than an A+ idea. And the same sort of applies for, not just the founding team, but also like the executive team that you build out. And I've seen it with businesses. I've seen founders that are fine, but the business doesn't take off until they bring in that second, third, or fourth person that really is an expert in like that one specific area that they need to work on. And the business takes off from there. And but for that key hire, the business wouldn't have taken off. End of story. Like, black and white. All the investors and the pitch decks and the technology, throw that out the window. The one differentiating factor in that equation was the new hire that brought in. And then, so then it comes back to, so where do you bring these new hires? How do you get this? And this is a conversation that you and I are having in real time.
Yeah.
It's not just about working with a recruiter and bringing them in and, just assuming that it's all going to work out, right? It's spending the time up front. This is I think the part that everyone's pretty familiar with, is spending time up front to making sure you know what you're looking for. Like giving someone like an Alex Bond, the information that you need to go find the right people. But the other piece that doesn't get enough attention, that's becoming more and more critical, is because this is such a employee environment. You're not just interviewing people thinking that like you're doing them a favor by bringing them in. You have to, we were just talking about this.
Yeah.
You have to be prepared to sell. And so that's a weird situation for a lot of employees for early stage companies to be in. Outside of the founder who's been selling since day one, a lot of them just think that, hey, you're going to bring this individual in, I'm going to ask them a bunch of questions, and if I like them, I'll make an offer and they're going to join. Nope, not anymore. Not in 2021.
Yeah, not at all. I mean, obviously you and I were speaking, like you say, it's in real time about this, but it's my pet peeve. Like it drives me to insanity, because I think if you've got the audacity to go out and raise capital, and you are audacious enough to think you're going to change the world of insurance, which is depending on the way you look at it, 600 years old, 1,000 years older, industry. How can you have the audacity to sit there and go, to not put enough time into the recruiting process, and by time I mean defining what you need, networking, interviewing people when maybe you're not ready to hire because you might need that person in 6 months' time. So building those kind of relationships, relationships with people like me. It doesn't have to be me, but find a recruiter that you trust, that can bring you value, that you want to work with. Building internal infrastructure, teaching your guys how to interview, like all of these things for me always come like afterthoughts, and I'm stunned that they do, because I always think with the raise, I'm like, well, what else is the money for? Like, what's it really for? We want to spend it on marketing, or we want to spend it on, engineering. It's like, well, those are people. Like that it's people that are going to execute that. So, to not take the time out to, to kind of focus on that is, for me, insane. And I know I'm sort of preaching to the converted here, right? But one thing that I really struck me, so this week alone, I've seen 2 people that I've spoken to about, we want to hire the best of the best of the best. And they asked me to do a pitch. I didn't hear anything. That's quite normal. There's no, like, that's part of the job. And then like they're advertising for these roles on like LinkedIn. And I'm like, so that's your strategy for finding the best of the best of the best, is to sit there and passively look for someone like that just doesn't match what you're saying you're going to do. It's just, there's not a parallel there. To stop me having a rant and ask you an actual
it's just funny. It's like, this is like, turning this around, like the 2021, forget about VCs and whatever, because we're becoming more and more of a commodity. It's what you're doing, because what you're doing in terms of like the opportunity is so new, right? The environment for employees and how difficult it is, it's getting worse every day. Right? I don't think we've peaked yet.
No, not at all.
So these are all new skills that entrepreneurs, executive, early stage businesses need to build that they've never had to think about before. And so that's opportunity for recruiters. In theory, I think it's an opportunity for an investor like me. And that's why I'm taking this so seriously. And that's why, I got so lucky and I'm so honored to be on your podcast, is because I'm spending the time, right, trying to think through what makes sense. How can I support my entrepreneurs and founding teams in this ridiculously competitive hiring environment?
Well, we are seeing a lot more of that, aren't we? Like it's becoming more part of the offering for and it used to be kind of, it seemed to me that in the venture community, it was more it was an implied part of the investment was to sort of open up your network and try and connect good people to these businesses.
Right.
But it's becoming a little bit more formalized because it's like, right, how can we differentiate in a market that's that rich with capital? You never thought you'd get your 5 million checks turned down because you don't have support for recruitment, right?
Alex, you know what I'm thinking about? This is in real time.
Yeah.
I can't wait to see, and it should come any day now. How about a deck that like a part of their strategy is we have a differentiated hiring strategy.
Yeah.
Right. You know what I mean? Like literally a page on, and as a VC, as an investor, it probably makes sense to start asking this question. We always ask, well, who do you want to fill? Do you have profiles? Great. They know exactly what they want to fill, but rarely do we ask, well, how are you going to go fill them? Because, if the answer is, we have LinkedIn and our networks and we think we'll just blast it out and on our website. Okay. That's a C+ answer. So, okay, that could be part of it.
Yeah,
but what else are you going to do?
Yeah. Yeah. I think that's like completely, I did a talk like 5 years ago, I think. And it was to a bunch of kind of tech companies. And it was about, it was called, what do I call it now? If a tree falls in the wood, does it make any sound? And right. the point was that people were advertising for jobs on LinkedIn, maybe, but on their website, and that was the whole recruitment strategy outside kind of like people that they knew.
Yeah.
And I was like, the best people are not looking at your new tech startup to find a role. Like they might stumble upon it, they might kind of by chance, but the circles of kind of influence, the kind of circles of kind of your connectivity to those best talent are not that rich, whereas you need proactive strategies. So, I would think it was incumbent upon a new kind of founder to be going, right, these are the issues I'm going to have from a talent perspective, and this is how I'm going to deal with it.
Right.
Because one of the things that I was going to ask you is that do you think founders generally underplay the importance of talent and the amount of time and effort they're going to have to put into that?
I think early on when we've seen this, founders, they under-index on how long it's going to take them to find the right person, and they sort of just like, I need a person, I don't want to spend money because I'm an early stage founder and I don't have that much money.
Yeah.
And they don't realize that it's penny wise and pound foolish, right? They may get someone in and then very quickly realize it's not the right person, and so actually now they're going to spend more money and waste more time. And if they had just said like, look, this role is so critical, or these 2 or 3 roles are so critical to the success of my business over the next 12 months, 18 months, that I'd rather pay someone, spend a little more time like going through a comprehensive process to ensure that I get what I need.
Yeah.
And I guess we're starting to see more of that, Alex, probably not as much as you and I both wish we saw, but I think it's an inevitability, right? That the smarter, more progressive founders and entrepreneurs are going to start to do that, and the market will inevitably catch up.
Yeah, I've seen that. I mean, like, I'm obviously biased because I always think of founders smart when they want to work with me. But joking aside, just the founders that I really sort of see having huge momentum are the guys that invest in. I might have a call every week with them just to talk about what's coming up, what isn't, and that's just me. There's plenty of like good people that do what I do, but it's just having a connection with someone that you trust to kind of, sometimes it might even be like, does this person exist? I want to fill this type of spot, because you don't know what's out there. But
right.
I think something you raised earlier was, I sometimes get that, we just want to see good people, and look, I know what I think good people look like, but what problem they're going to solve. Great people want to know what they're going to come in to do, so the clarity around that's important. So look, I'll move away from talent because I otherwise won't stop, and I wanted to ask you about kind of a bit of future stuff. But last thing is, like, we've talked about kind of what's negative about pitches that you might see. What's your biggest frustration with portfolio companies? Once you've invested, is there a kind of theme of something that you find is the most frustrating thing from those businesses? If you can say that. I don't know.
I was going to say, first I'm knocking founders' inability to appreciate how important hiring is. Now you want me to knock. I'm already regretting, because founders are far more entrepreneurial, braver, smarter than me. But with our portfolio companies, look, it's so I'll say something, but I'll preface it with, because I think about this all the time, and it's cliche, blah 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 blah. But I work for our founders, right?
Cool.
Investors, we work for our founders. It's an honor for them to allow us to be a part of their journey. Frankly, it's an honor for us to allow them to be a participant in, their business, invest in their business. And so, yeah, sure. If things are going south really quickly, right, and someone wants to come in and say, look, if you don't do this, your business is going to fail, and they don't do that, that's a different story. But, as long as things are going reasonably well, I'll give my 2 cents. And if, my support, and if a founder takes it and does something with it, great. And if they, they don't, it's not my business, and I sort of invested because I trusted that person. So yeah, are there times where I'm like, I think I was right, you should have taken that advice, and they don't, sure. But am I losing sleep over it? Absolutely not, because that's sort of part of the game, and that's the deal we make. It's not my business.
Is that something that's evolved in you over time? Like have you kind of put more distance from when you first started doing this, or have you always kind of took that kind of?
No, you're right, Alex. I think out of the gate, it's like, we're more, I thought that we were more on equal footing, and to a certain extent we are, but I definitely get a little more, I take it a little more personally when my advice wasn't heeded. And I think over time you realize that it's like, look, that's not your job to force something on a founder. You give them support, you give them your guidance, they'll come to you when they need it, and if there is something proactive you want to reach out to them about, that, that works too. But it all goes back to that empathy thing, right? It's a game of empathy.
Yeah.
And, the last thing you want to do is force something down someone's throat, only to have them say, whoa, never going back to that guy.
Yeah.
And then going forward, the whole relationship is strained, because every time you ask for information, you get a half-baked answer, because they're not interested in giving you the full story, because they know you're just going to beat them over the head.
Yeah. It's amazing to me how much of like business, and this is just, in general, but it's only about empathy, and it's only about people. Like, I don't think it's like very few people get up in the morning and go, I'm going to do a bad day's work, or I'm going to try and fail, and right. Sometimes we have to step back and remember that, and go,
good point.
No one's trying to mess up,
good point.
But we all do, right?
Yeah.
I'm laughing because I definitely did something completely ridiculous yesterday, and I'm like, it happens, it happens, and it's something really. Quite often these things are really minor, but they mess up for you. But on to more positive stuff, and I just wanted to know what's next. Well, I was going to say what's next for NFP, but it'll be
So we're in the process of moving from NFP Ventures to Distributed Ventures, as I alluded to at the outset. So in terms of what we do as investors, differentiation, strategic support, muscle, all that good stuff, nothing changes. The only change is, instead of NFP and individuals in NFP being our sole or our core LP, they're going to be sort of the anchor block LP. And we're actively engaged with outside institutionals. And the thought is, we've done such a phenomenal job, but if I can say so myself, with helping our portfolio companies, early stage, leveraging what NFP has, to offer. And so the thought is, we don't want to work with 50, other potential strategics, but we do want to sort of broaden that strategic scope, that strategic horizon, take the same playbook that's worked really well over the last 3.5 years, and, bring others to the table, so to speak. And so, same core team, same core thesis, again, hopefully the same success, but over the coming weeks and months, we should have more information on the Distributed Ventures fund.
Awesome. Adam, I think that's a really positive, lovely way to end it. So thank you so much for taking the time. It's super interesting. I've wanted to do this one for a while, and I hope I get to come out to New York soon, and we can have a beer that we've probably been thinking about for a while.
Anytime. Say the word. Right. Thanks for having me, Alex. This is a lot of fun.
Thanks, buddy. Appreciate it.